Dinshaw Irani joins us now, CIO with Helios. Let's take our conversation forward. Dinshaw, thank you for joining us. Uh, we've had 3 weeks of hectic news flow. We are now approaching that lean patch, so to speak. In this patch of hectic news flow, while stocks were volatile, benchmark indices they exhibited a lot of resilience. Are you delighted and surprised that whatever could go wrong has gone wrong for Indian markets, but yet we are flat for the year?
Nikunj, thank you for having me on your show. And if you go to see year to date, India is one of the worst performing markets in the world. They may have remained flat, but the fact is that the world has gone away from us. Conversely, last year, India was the best performing market in the world. Okay, so that we are evening out. I think that is what is playing out here. Secondly, you mentioned about China that you saw the FII flows for the first time on Friday, a heavy flow of 1,000 odd crores on Friday. Our feel has been that that trade of exit India and buy China, I think that is more or less somewhere on the way, on its last legs per se, because I mean, if you go to see the premium that India went to in October end, when China was at a low and India was fairly steady, the premiums are shot up to some 180% on peace, pure peace to China, vis-a-vis China, which on a last 5 years average would have been around 80, 90, 60 odd. And India somewhere there now. So that we believe is playing out to the hilt. And I think another matter of a month or so when this fully plays out. The third thing to keep in mind is that China opened up, right? And actually $18 trillion of savings are rather deposits are lying in Chinese banks. And I'm sure the Fed can see that. And they're worried that even if a fraction hits, you just cannot imagine the kind of upheaval it may cause to commodity prices or to even to the supply chains per se. And I'm sure the Fed is worried about that. Also, the Fed is worried that the employment rates are remaining elevated. They can't see unemployment much. And anyway, the way US is going, I mean, concentrating on manufacturing rather than anything else, onshore manufacturing rather. I don't think the employment rates are going to go down as such. They'll remain at elevated levels. So that's another worry. So frankly, I mean, till the time the world is going through this kind of upheaval, I don't think India will be able to perform as in go up. It may remain steady. In fact, our call is that the next couple of quarters, and we've been calling this out for a while, that the next couple of quarters, we will remain steady as such. And one has seen that, right? I mean, even if the earnings growth, I mean, the earnings growth are pretty good. In fact, till the beginning of Feb, when I was keeping track of what was happening, earnings growth was around 18% in the Nifty, the ones which are reported in Nifty. In fact, if you take out commodities and metals and all, the oil and gas and metals rather, the earnings growth was around 28%. So obviously it's been a healthy earnings growth, and despite that, India has been flattish. So the fact is that world has to stabilize before India starts its journey up. However, our feel is that India will outperform in the near term. I mean, whenever it remains flat, because the world will not be doing as much. So that's the call that we've taken.
Right. Dinshaw, can't take my eyes off from what an ABB, what a BHEL are reporting. Decadal, high margins from cap goods. Are you scouting any newer stories within this sector? And does it seem like the journey could have just begun on cap goods?
Actually, Aisha, we have been scouting around for a while, but frankly, I mean, our problem is the valuations. I mean, we've been fairly cautious on that front. As such, we may miss out a few names, but as a philosophy is like there are quite a few stocks in the market. If you miss out one, there'll be 100 more that you can dip into. So we're looking at the right prices and the right valuation probably. And frankly, I mean, the way India is going. Obviously, when you're talking about capex-driven economic growth, you're talking about really these kind of stocks doing well as such, but ultimately one has to take a call on how far or what value we can give to these stocks. So we're staying away for the time being.
Can't help but also notice the recovery that one is seeing in the new age fintech companies. I mean, be it Zomato with the turnaround and delivering ahead of the guidance on their numbers, or for that matter, PB Fintech as well, wherein the new business losses have only narrowed. We heard from Zomato as well, and we're yet to hear from Nykaa this week. Change of heart, add positions perhaps at lows?
Oh yes, we did actually. I mean, Samir comes on your channel
Yes.
and gives out the names, which I don't. But the two platform companies that we own, right? And we frankly we added once the results came out, or and we've been averaging out there as such. And frankly, I mean, both the companies, the results were fantastic. In fact, our feel is that given the potential that India has of the consumer base, in fact, India, if you see the kind of consumers they can appeal to, it's like a whole of Europe put together. That's one single place where these players are working out, and especially in the case of Zomato, I mean, it's a two-player market and they're on the verge of breaking even. In fact, they have revenue on the EBITDA level, but thanks to the hyperlocal, they're still not blinking. They still haven't done that. But our feel is that it's a matter of time before they do that too. And Paytm, you saw that the results were like through the roof.
Right. So with Zomato, are you not worried about growth slowing down? This is one of the companies which has really penetrated major metros. They're going to small towns, but in small towns, Dinshaw, going out and eating out is a celebration. It is not convenience. So isn't there going to be a challenge in terms of the growth what Zomato will have now?
So Nikunj, I still remember when I gave out the name of Paytm, you came on the. I mean, I think Aisha was interviewing me. You came and you started drilling me on that. But frankly, I mean, what do you look at a platform, right? I mean, you're looking at the fact that it offers convenience, as you rightly said, that smaller towns may not be the convenient story, and that's why you saw that they moved out of some 200 odd towns to 25, if I remember right the figure. They moved out of those smaller towns as such, and I mean, the top 30 still account for a bulk of, if I mean, majority of their revenues as such. And our feel is that even there's enough potential to go about milking the consumer, not milking, sorry, the other, giving more convenience to the consumers as such. So I think we'll stick to that. And frankly, I mean, it's a trend, maybe not now, but later at some point in time when industrialization hits these smaller towns also, you'll see that convenience will play out to that extent. And frankly, that's the call on India altogether.
What about your outlook on how things have transpired within the Adani Group of stocks? Earlier this morning as well, we were talking about it, saying that now perhaps it will be guided by purely news flow. Your take?
So, Aman, frankly, I mean, I don't think Adani ever had a problem of solvency, right? I mean, it was more of a valuation call than anything else. And they were very prudent using their expensively priced stocks or whatever you want to call them as currency to buy businesses, genuine businesses and such. So obviously these are cash flow companies, and I don't think there's a problem here. In fact, we were just looking at the bond payments that are due, and the first bullets are sometime in FY of 25 as such. So they're very well in place there. Frankly, I mean, again, the call here is that you should look at valuations, and we've been very selective in this space. We have a couple of Adani companies as such, and they're both in terms of cash flows or PEs or valuations, whatever you want to, or debt equity, you want to play those names. They're very much in sync with what our guidelines give out as such.
Adani Ports and Ambuja stroke ACC.
You guessed it.
Is it a good time, let's say, to buy more into Adani Group of stocks, the two names which qualify as per your internal process? Because right now there is a technical factor which is at play. Fundamentally, nothing changes there. Nothing changes for a cement company as long as the demand is real. Nothing changes for a port company as long as India is importing coal and India is exporting machinery and grain. So is it a good time to perhaps add more into, let's say, Ambuja, ACC, stroke Adani Ports?
So, Nikunj, I won't tell you whether it's time to buy or sell or whatever, but let me put it this way. Ports business, right? I mean, they account for roughly around probably a fifth of the port traffic in the country. They account for almost 40% of the container traffic in the country. And the fact is that the group itself, all over, I mean, 1/5 of probably the power that goes in and stuff like that. So it's just a massive play as such, yeah. Ultimately, the investor has to take his own call. Our stance has been that whenever we saw a correction in these names, we did pick up the names as such, and I'll leave it there as such. And frankly, I mean, our comfort level has grown much more in the correction that came by in these two names per se. So
Okay, and I just wanted to understand as well what the outlook is on auto, because as far as I understand, there's no real exposure within the space, or it's very negligible, Dinshaw?
Nothing, Aman. In fact, there's zero exposure in the space. We continue to believe that there's a big disruption happening in this space, and one has seen that in the two-wheeler space per se. The way the demand has, not demand, rather the way the growth has been taken away by the EVs. I think it's a matter of time before it happens in the PV space also. And in fact, one has seen a new Chinese player coming in, and he's probably the world's largest EV manufacturer today. In fact, unseating Tesla also to that extent. So I think there's a lot of heat going on in that space, and we would rather avoid getting in there.
It's always great having you on the show. Glad that you could take time out and join in today.
Thank you, Aisha.